Hey everyone, that's Robert Keens with goldsilverpros.com. It is Wednesday, August 5th at about 9 a.m. CST. I'm gonna have to date and time these videos because what's happening is we have breakout in both the precious metals markets. This time it's silver breaking through resistance and going bonkers. And if I don't date and time these, then you guys are thinking I'm recording them after the fact. But I wanted to show you what's going on in the silver's market and why it's going bonkers. So let's go straight to the charts and see what's happening. So I have up here goldprice.org. You can see silver is broken 2705, gold's at 2042. We're going to focus on silver today. There was a resistance line that we crossed through, and it'll walk you through that resistance line. So on the chart here, as you can see, we have, I drew various resistance lines on the chart for the silver price based upon past price action, because these are psychological lines in which traders will tend to trade up to and prices will bounce off of. I did a video last week, about how silver hit this line right here at 2450, this yellow line, and then bounced right off of it. So we're going to go to the 1 month chart. I'm going to change my time frame here to 1 month. And we're going to see that 2450 line, and silver came up and hit it right here when the video I did last week. And then there was some selling, you can see by the red bar here, and it didn't quite challenge again. It came down, but then the longs came back in the 31st, the 3rd, and yesterday, and have driven silver price through the 2450 resistance line I have here. And it's about to challenge this 26 and something dollar line that we have right here. Let's go to in fact, I think it might have just broken through. Let's go back to the 12-year chart. So we drew this line right at, I want to say that's right at $27. So we'll call that a $27 resistance line. We've officially just pinged it. We've hit that resistance line. And you see how silver will probably trade around that line today. Just psychologically, it's going to trade around this line. Whether or not it breaks it, we'll have to see. And this chart's a little bit behind. That's why I got the goldprice.org here. This refreshes, but it's sitting at 2603. It's actually sitting at 27 is the real price. But this chart is handy to show you guys the resistance lines and where we are. So we're actually sitting at this red line right here, 27 bucks. And as soon as this chart updates and gets to 27, this line will move down and you can see a little bit more clear. But we're right at that resistance line. Let's go back to the 12-year chart. We're right at that psychological resistance line. Now, look at what silver is doing. It's literally moving almost straight up. We haven't seen this in silver since between 10 and 11, when it had a really big move. It burst through these resistance lines, and then it reached about $32 and it cooled off, and then it resumed its move again. We appear to have the exact same thing happening in silver right now. We appear to have it challenging the previous $27 line. It'll probably punch through much like it did here. It may meet the 32 and fall off a little bit and then challenge it again. I think that's probably what's going to happen because of what's going on in the derivatives and the futures markets. So let's talk about that. I went to the New York COMEX to look at the delivery notices, and this is for silver futures. I talked in my last gold video about intent date. If you hadn't watched that video, please go back and watch it. We published it yesterday. It talked about intent dates for delivery. Essentially what that means is a couple of days before the first trading day of each month. So we're in August now. The first trading day of August would be August 3rd, which was this past Monday. A couple of days before that, you can file a delivery notice for that month saying that you intend to take delivery of the actual physical precious metal. So that's why we see coming in on the 30th, the first delivery notices for silver. That's a couple of days before the August 3rd first trade date of the month for the August contract. So we saw, a relatively modest 475 contracts come in last Thursday. Last Friday, we saw 694. Yesterday, on 8/3, we saw 912. And then yesterday, we saw this spike, 1,097. That's almost double what we've seen the previous 3 days. Not quite, but getting pretty close. So people came in yesterday and said, long silver, long silver, long silver. We want the physical. And I think that's why we see the price spiking today. Of course, the price has been spiking for a while, but it kind of come down and boom, right back up. And again, right now we're at 2703. So you can see it sitting right around that 27 resistance line that we have here. So I believe that's basically what has happened is the futures market, people are the longs are intending to take delivery. That's what the delivery notice is. We had a spike in that yesterday, and that's what's causing the actual market price to spike this morning. And of course, we want to look at the SLB fund flows. where a lot of people put their money if they're just trading in and out, but not wanting to take possession of the physical metal, because we know that the SLV does not offer shareholders the ability to redeem in physical metal. It's right there in their prospectus and in their documentation. So if you invest in the iShares Silver Trust SLV, you cannot get the silver out, but you have exposure to the price. So the SLV is a derivative trading vehicle, and it tracks the silver price. It's a tracking vehicle as listed in their literature for silver. So if you just want to get exposure to that, we can see robust inflows leading up to this week. Now, we did have a little bit of outflow earlier in the week, but it was a little minuscule. But you can see the trend over the last month is a lot of inflows. You can see over the last 3 months, a lot of inflows, really spiking in July here. We see these big bars in July for inflows into the SLV. And in the last 5 days, we had this big spike, and it started to spike again yesterday. So I think that data, the inflows into SLV, are telling us that people want exposure to the silver price. So you add that together with this 1,097 contract of 5,000 silver ounces, by the way, and you get this massive increase in people wanting exposure to the silver price. But I think this is the most bullish part. The standing for delivery for the actual physical, more than the derivative price exposure vehicle of SLV, is what's going to drive the silver price, because we're saying we want the physical silver, and that's going to drive higher and higher silver prices. And again, we're sitting right here at this $27 line, as you can see on goldprice.org as I'm recording this, now 27.06. That's the highest I've seen it today. I saw 27.05 when we started the video. So the longs are coming in, bidding up this silver price. We're sitting right at this resistance line. I don't think this is a huge resistance line because it was on two troughs, a trough here in late 2010 and a trough here in spring of 2012. And then another little trough at the beginning of 2012. So this is actually would be more of a resistance line headed down than up, but psychologically people could see this as an upward resistance line as well, since it has historical significance. However, the exciting news about silver is once we punch through this line, I don't see another major resistance line until 32 bucks. That's amazing. That's another $5 on the chart. So if we stick above $27 today, next target 32, maybe later this week or earlier next week. I don't think we'll get it this week. I think we actually could hit 27 and range trade a little bit, just like we did at the 24.50 target that I talked about last week. And let's look at that again. 24.50 target, we hit it last week. We bounced around. We came down. The market wasn't sure. There was some sell-off here. And then the longs came back in and said, nope, give us delivery. This is where you see the delivery notices on COMEX. You start to see them the 30th of July now, and that's basically telling COMEX we want the physical, and boom, price launches right up past that previous resistance point. It's beating it by about, what is it, about $2.50 right now, by about $2.50, and it's challenging right now this $27. So if we continue to see on the COMEX these delivery notices come in the following days for 8.5, which is going on today, tomorrow we could look back at the 8.5 numbers and say this many contracts came in and stood for delivery, and this many contracts came in and stood for delivery on 8.6 and 8.7, so on and so forth. And we continue to see the derivative investment, the Robinhood investors, the traders, the mutual fund guys who like to invest in these type of derivatives keep coming into silver. That could increase the upward pressure on silver as well. But the main thing that I want you to pay attention to is the physical deliveries on the futures market. That's what really is going to determine the silver price moving forward. And I think we're in a massive bull run here. Oh, by the way, on yesterday's video on gold, I talked quite a bit about something called Force Majeure. I'm not going to go too much into detail here, but Force Majeure is essentially a clause in a contract, and the CME does have one for their futures exchanges at section 701, which I showed yesterday. They could declare Force Majeure if, for example, people keep coming back to COMEX for delivery and they run out of the actual metals in their warehouses and they can't source more to replenish their warehouses. Given that we're in a physical supply deficit right now because of industrial use, because of some of the slowdown or shutdown in the mines and refineries due to COVID, we're having a major silver shortage issue right now. I believe people are coming to COMEX to get it. But if they run out or get close to running out, they could call Force Majeure. Go back and watch yesterday's video on gold where I talk about Force Majeure in detail. And I lay out the case where COVID could be used to claim Force Majeure legally. And it passes the 3 legal tests, I believe. I'm not a lawyer, but just from reading that, passes the 3 legal tests for Force Majeure, meaning they wouldn't have to deliver physical anymore. They could suspend that for the duration of COVID, which is an epidemic or a pandemic. and that we may not get physical delivery on the comex anymore. What that would do to the price on comex would likely short-term spike them, but we'll have to see long-term if people are able to source their metal through other means. And that, I think, the biggest thing that would call into question the legitimacy of comex as a market, because if they're never, depending on how long they don't deliver the metal, people can say, okay, screw you, why are we using you anyway? Then you're basically just a casino where we're gambling on the price and we're not dealing with the physical. So that's something to see. I think that'll take a few months to play out if they do call force majeure. So if we keep seeing the metal come off here, we keep seeing the price rise, indicating the longs are standing for delivery, and we see them call force majeure. If it happens, then a few months after that, we would see how the market's going to react to that force majeure. Are they going to still consider COMEX to be a legitimate market or not? And then how would we go about valuing silver price if we're not doing it via the futures? This would be a very interesting time in American history to see how this all plays out and to see what happens. I thought this is very interesting, guys. So I wanted to show you what's going on. Celebrate if you are a silver bull. Now we're at 2708. It keeps going up as we're presenting this. Very interesting times. I'm going to get this video out as quick as I can, but wanted to show you as it's happening this morning and why it's happening and what's going on with that. Till next time, guys, this is Robert Kings with goldsilverpros.com.